I will start with primary markets today. What is a primary market? We've already discussed. Primary market is a market where securities are issued from the issuer to the investor. First time securities are issued. And then now primary market is a market for first time issues, as I told you. It's also a classification of financial market or capital market, industrial securities market. Primary market is also called as new issue market. We call primary market as new issue market. It's otherwise called as new issue market. And we have seen a little bit about primary markets in the last class, and we will continue what it is from there on. So now these issues in primary market can be issued to public. We call it as public issue. And then where the securities are issued to the general public, or it is issued in public. Otherwise, it is called as private placement, where securities are issued from one company to another company, be it private or government. And then we have preferential issues, like for preferred investors, it is issued. All these we'll see in detail. Rights and bonus issues. These are all called primary market issues. The type of issues are public issue, private placement, preferential issues, rights and bonus issue. There are also others like bought out deals, offer for sale, all these things. But we will discuss only these in detail. Now, a public issue does not have any limit. But if it is going to be a public issue, allotment should be done to more than 200 people. If it is done to less than 200 people, it will be private allotment. Hope you understand that. In the primary market, if securities are issued only to 200 people or less than that, it becomes a private placement or private issue. But if it has to be done to the public, it has to be more than 200 people. Now coming to the securities that are issued. In a securities market, these are certain terminologies. Securities are issued either in face value. What is a face value? It is a value of the share that is printed in the certificate also. We say value of the share. It means that securities are whatever is printed on the nominal value, whatever nominal value is printed on the certificate, it is called as face value. And securities are traded in premium. Whatever is the market price, it could be in premium, or it could be in face value, or it could be at discount. Par value se jada we say premium or discount. And generally, when it is going to be equity securities, we call it as face value. If it is going to be a debt security, we call it as par value. Issue is done at discount, redemption is done at par value, right? So when the issue of securities closes, then the securities are traded in the secondary market. Like I told you, when companies allot the investors, so say for example, I subscribe for an IPO, right? And I pay the money. I wait for allotment. Company receives all the subscriptions. It receives the it receives the money, and now whatever has been subscribed has to be allotted. If I've subscribed for 100 shares and I can get 80 shares or even 100 shares, because depends on the number of subscription, allotment is done. So once I get it allotted, now all the securities get allotted from the company's side or from the depository side to the investors. And once the allotment process is over, the company lists its securities in the stock exchange. And once it is listed in the stock exchange, trading of the securities take place in the stock exchange. I hope you understand that. Once it is allotted in the primary market, the securities are allotted to the general public. Are you following? Are allotted to the general public. Once it is allotted, once the allotment process is over, the issuing company lists it with a stock exchange so that it becomes tradable henceforth. So that is when it passes on to the secondary market. Now the securities that I have, I can sell it to another investor, right? So which means if I sell it in the secondary market, buyer is also going to be an investor, seller is also going to be an investor. Here the issuing company does not have any role to buy or sell. I hope you understand this. Now, what are the different types of primary market issue? As I told you before, we have public issue. When capital is raised or fund is raised by selling securities to the public, it is called as public issue. We have two types of public issues, namely IPO. First time when the company wants to sell its shares or any other instrument, and if it is selling it to the public, it is going to be called as initial public offer. As the name says, initial matlab first. So first time sale is called as initial public offer. Now, supposing the company wants to raise additional capital, like it is already there in the land, in the country, and it is being listed, and now it wants more capital to be raised. Supposing it wants to issue more equity shares and raise capital from the public, it will say follow on public offer. Already existing company, when they want to raise more shares, they do it via follow on public offer. I hope you're following this. Rights issue. Rights issue talks about issuing shares to investors who already hold the shares. Say for example, I hold 100 shares of a company ABC Limited, and the company wants to expand its equity base. So it is going to say, I'm going to give the existing shareholders a right, which means they can purchase for every 2 shares they hold, they can purchase 1 share at the rate of say 80 rupees. Market price may be 150 rupees. Are you following? These are some strategies that the company uses to expand its equity base. I already, to existing equity shareholders, I already hold the equity shares of the company. I'm holding 200 shares. Now the company says a shareholder holding 2 shares can purchase 1 share as a right, and it is going to be purchased at a price lesser than the market value. So what I will do, I will also apply for the right. I am entitled to purchase 100 shares, right? Because I already hold 200 shares, and the company says for every 2 shares, you can purchase 1 share at a lesser rate. Therefore, it is again a right. It is not an obligation. Existing shareholders, they can either exercise their right. I can go in for purchase, or I can ignore the rights issue. I can leave it off, right? So it is at the discretion of the shareholders. And again, now what happens is when the company receives subscriptions, if it receives exactly the same amount of shares it wants to receive, it has to issue. It will allot to all of us. Otherwise, this is also done on a pro rata basis. Like for example, if the company has 1,000 shares to be issued as rights, and subscriptions have come only for those 1,000 shares, it will allot to everybody that have subscribed. But then if it receives much more than that, it is going to do pro rata allotment. Are you following this? Now, what is preferential issues? There are certain preferred group of individuals that the company decides on. In case it wants to raise additional funds, it will select those group of individuals and it will issue shares to them, or it will issue the securities to them and raise capital. This is what is called as preferential issues, the issue wherein certain preferred group of investors are selected and securities are issued to them when the company wants to raise additional funds. Now, why should the company issue shares to the public? Company issues shares to the public to raise money. whenever it wants to expand. It requires capital for expansion and growth. And this capital can be either equity capital or debt capital depending upon the company's requirement. And this money is also raised through primary market, and it directly goes to the issuing company. Whatever is raised from the primary market by way of capital, it goes to the issuing company, which is using it for productive purpose. So when it is using it for productive purpose, obviously it is going to employ people, which is going to generate income and create demand for goods and services. Therefore, increase consumption, increase production. Therefore, capital formation is done. Therefore, we say when money is raised in primary market and it goes to issuing company, there is capital formation taking place. Functions of primary market. I'll also make a note here. Role or functions of primary market. Primary market leads to capital formation. As I told you, obviously, when you raise capital from potential investor, it is at a lower cost. And then when you talk about liquidity, I told you how it helps in capital formation. In the sense, liquidity in the sense as securities are issued in the primary market, they can be sold immediately in the secondary market, because these, whenever capital is raised from the public, it is a mandatory rule that it has to be listed with any stock exchange. Listing with any stock exchange helps the investors to have an liquidity in the sense anytime they can encash it at market value. What is liquidity? Encashability at market value. Supposing you purchase a real estate or you purchase a house and you purchase it for, say, for example, 50 lakhs. You want to sell it, say, in a day or two. What will you do? You will try to find that 50 lakhs or market value. Supposing market value at that time is 75 lakhs. When you're selling it in a hurry or when you need cash immediately, real estate will not help you much. But then if you talk about gold jewelry, it is also not very liquid. But it is only these financial assets like equity capital, which is very, very liquid. The moment you sell in the market, whatever is the market value, you will get that market value. Apart from that, diversification. It helps financial intermediaries to help in primary market. What happens is, whenever there is investment happening in the primary market, you don't invest in just one sector. You try to identify variety of sectors. Like, see, if I'm investing in a mutual fund, the asset management company is going to diversify my funds. They are going to invest in various other companies, and then they are going to be investing in these companies and buy units for me, like in, say, stocks, bonds, whatever I wanted. So there is diversification happening. Supposing I invest in oil sector only, oil sector crashes, my entire money is lost. So if I have 10,000, I divide it between 5 sectors, if not one sector, there is always another sector which is being handy, and I am able to meet my investment objective. I am able to earn my return, my capital is also safe. Also, primary market's function is to have reduction in the cost. Everything about securities is given to the investors. All the information are given to the investors, either by way of media or by way of, I mean, in the prospectus, what is there is being published to them by media or by giving notices, etc. Therefore, it reduces the cost because you don't need to search everywhere like whatever is the security. I just need to read the prospectus and I will find out. Now, what are the features of primary market? I hope you followed this. The functions of primary market was to diversify, reduce cost, provide capital formation, and provide liquidity to investors. Now, talking about the features of primary market. Notable features of primary market are it is a new issue market for long-term capital. I told you primary market is also called as new issue market, where issuers are going to issue the securities to the investors. And the securities here are directly invested, given to the investors and not through any intermediaries. Much more than that, what will happen is it is directly from issuer to investor. Whereas in the case of secondary market, it is from investor to investors. We do have intermediaries here. So, and on receiving the money from the new issue market, company is going to use it for productive purposes. It is going to issue certificates. These certificates now are going to be issued to the depository actually. Depository is going to convert them to electronic form and allot it to the investors. And whatever money is obtained by the company after the new issue are utilized for the expansion of their business or setting up a new project. So they are not going to be wasted. It is going to be purely used for producing goods and services by the company. And also that any external finance such as long-term loan from financial institutions are not in the primary market. They have to, in case they need a loan, they cannot come to the primary market. So the option called going public means you are going to issue capital, new issue market, raise capital, and then convert all the private capital to public capital. You're going to raise it from the general public. Are you following this? So what do you actually need as an investor? You need to have a PAN account number, bank account and demat account. See, whenever I want to invest in an IPO, what will I do? I will take up a form. The form asks me for my PAN number. So all those who are 18, whether you are going to invest or not, it is very, very essential that you need to have a PAN number. Are you following? PAN card एक ले लो जितना जल्दी हो सकता है. And then open a bank account. Bank account in any case you need. Whether you are going to invest in primary market, secondary market, even otherwise receive money, and whatever savings you have also, you can park it in the bank. And demat account. What is a demat account? Demat account is electronic account to hold shares. Like you have bank account to hold your money, you have demat account to hold shares. Are you following? Are you following? I'll just give you a brief idea of what it is. Like I have depository, right? Now, what is this depository? Depository is an institution for converting all your physical holdings into electronic form, right? Under that, we have two depositories in India, the NSDL and the CDSL. Like we have just one RBI central, we have two depositories here. Right? So I have two depositories in India, NSDL and CDSL. National Securities Depository Limited, Central Depository of Securities Limited. Now when I have NSDL and CDSL, a company, issuing company may appoint any of these depositories. The investors do not have a role here. Company will appoint, supposing it appoints NSDL, it will surrender all the physical shares here. एंड जो भी शेयर सर्टिफिकेट है इनके पास दे देंगे. तो ये क्या करेंगे उल्टा, कंपनी के क्रेडिट में सपोजिंग इट सरेंडर्स 5000 shares, right? So if it is surrendering 5000 shares, say 5000 shares ABC Limited, right? So now ABC Limited has surrendered 5,000 physical shares with NSDL. So when it surrenders 5,000 physical shares, company के account में एक account create होगा and then 5,000 shares are in its credit. Under NSDL, there are n number of depositories, right? I have n number of DPs, we call them, depository participant or depository participants, right? There are a lot of depository participants under NSDL and the same case with CDSL also. CDSL also has a lot of depository participants. Right? So now as an investor, I can have my demat account with any of these, either NSDL or CDSL, DP. I have a demat account with Sharekhan. It is also a depository participant. I have a demat account with HDFC Bank. It is also a depository participant. Anybody, even the bankers here, who allow you to open demat account. Demat account क्या है? Those with the depository participants are called as demat account. So the investors are linked to the depository through depository participants, and they are linked to the issuers through depository. Are you following? Issuers are linked with the investors through depositories, and then depositories are linked to the investors via depository participants. I will have my demat account with any of the depository participants. N number of depository participants are there. I can have registered myself with any of them. I need to have a PAN number. I need to have a bank account number. I need to have a demat account if I need to invest. So whenever I buy a share, my bank account will be debited. I need to transfer the money or I need to issue a check. Money will be debited, and when the shares come to my account, shares will be bought by my broker. It will be credited to my demat account with any of the depository participants I hold. Also, to make a mention here, all the dividends paid by the issuer, company pays a dividend with the depository that it has. It will pay it to NSDL, right? And NSDL will identify who all have the shares and with which all DPs they have. They will pass it on, whether I have it here or whether I have it here. Will capture all my details and then they will share it. Are you following? The deposits, I mean the dividends are passed on to all the investors through the depository participants into their demat accounts. Company pays it to the depository. It is a job of the depository to identify where the shareholders are and pass it on to their bank account. And also, whenever there is any kind of annual general meeting or voting that the company has, email goes to all the shareholders. Like for example, I will show you one of the emails that I got. I'll just show you one of those. They've sent me an email that says they've identified it with the help of my demat account. So the depository has passed on this email. This is passed on to all the shareholders. They've mentioned the time, they've mentioned the venue, everything. It's an online meeting. It is physical meeting, they will mention the venue. They've said it is the 35th annual general meeting of the company, right? I have all the right to vote for the director of the company, right? They've given me the procedure for remote e-voting and e-voting at the AGM also. Back to what we were saying. Are you following this? Did you follow all these? Any information is passed on from the issuer to the investor through the depository, right? And what is an offer document? It contains all the details of the company, any relevant information, promoters, whatever project it is intending to take up, what is the current financial condition, why is it raising money, etc. Right? Now, when I told you price band, cutoff price and all, we will see with an IPO form in the next class. I will show you a specimen of IPO form also here. Can we wind up for now?